The following is a pre-recorded show. Welcome to Winning in Retirement with your host, Brian Akers, certified financial planner professional and founder of Akers Financial Group. Now, helping you win in your retirement, here's Brian Akers.
Hello, I'm Brian Akers from Akers Financial Group, and we welcome you to Winning in Retirement. Here today with me is certified financial planner professional, Alex Monk. Good morning, Alex.
Brian, it's good to see you, man.
All right, so it's a Saturday morning, and we're getting ready to run the Winning in Retirement show. This show has to be the show that you've never given before, the greatest show you've ever been a part of is what I'm asking of you today, Alex. Are you ready for that?
That's a tall order because, I think everything I do is great. So let's go ahead with, yes, I'm ready.
All right, so the reason we need it to be a great show is because we're going to try to answer this question is why you need an investment coach. Why? Why would you need an investment coach? How would you begin answering that, Alex Monk?
Oh, man, there's so many things. And right now is such an important time because the market's going crazy. I mean, it's volatile. It's up, it's down, it's sideways, it's flat. The news headlines are everywhere. There's a lot going on.
Absolutely. There's so much information coming out there. It makes people want to pull back, makes them want to do the wrong thing, makes them want to stop investing in the market completely. They want to pull, they want to sell. Even though some of the wisest long-term investors are beginning to doubt themselves.
Yeah, and it's easy to do because your emotions get caught up. And it's a different emotion than it is on the upside. So it's not like a one-for-one thing. When things go up, you don't get scared that they're going up too far.
Yeah, absolutely. And because of things like that, we want to put together a show called Why You Need an Investment Coach. Why you need someone to call and talk to that knows you, knows your goals, knows your situation, and knows what long-term goals, long-term view you have, and why you're invested where you're invested. And many times it can be as simple as a reminder. So this show is to try to talk to you about what the role of a coach, investment coach, is at times like these. So, Alex, you're thinking about many clients in your head. I can just see it spinning around. And you think about how you've been able to just talk when they come in and just say, well, look, it's working, what we've been putting together.
Yeah, and I have to remind people that, look, I show, just for example, like I say, okay, how much do you think we're down? And right. They're like, oh, 30%, 40%. I'm like, well, no, we're down 5%. Oh, I knew it was a bad year. Well, then I say, well, compared to the market that's down, let's say, call it 30, I'm happy with that result because that's not a big loss. That's easier to make up.
Absolutely.
But you got to have your risk concentrated in the right places. If all your money's at risk, guess what? Now's not a good time for you.
And that's hard when we meet with some of the new clients. They come in with 100% at-risk portfolios designed by all kinds of different stockbrokers out there. And what we see is that they did not take less risk as they got closer to retirement years. They pushed the risk into a new level, and that's where the volatility has even been greater.
Yeah, and we're seeing risks that we have not seen in, 30 years? Yeah. And that's a rising interest rate environment. And they're actually rising,
Yeah, so what you just said is we haven't seen it in years. So really, early 80s, interest rates hit like an all-time high. They were coming down for almost 40 years. And that coming down means that if you invested in bonds, you made money on the interest and the bond value was going up. So you had something called total return.
Oh, that's a good one, Brian.
And so there's mutual funds, ETFs out there called total return bond fund. Guess what? When we were talking about this, we've been talking about this ever since we had a radio show. But in the last few years, we've been talking about it a lot when we talk about bond funds and also about target date funds.
Oh, he said it.
Yeah, I was holding back on saying it. But the idea is that if you are going for safety with bond funds, you are buying an account that's going to lose as interest rates rise. And that's mathematical, not us guessing the market.
They literally are telling us we are raising interest rates.
Which is also them saying we're going to lower the value of your bond fund.
And everyone's like, oh, okay.
All right, so what happens is this. When we think about investments over the last 5-10 years, is that many of our choices and our retirement accounts have gone to target date funds with only a couple choices on the side.
Yeah, they're shrinking down the options, and they're doing it from a quote unquote fiduciary standpoint. Mm-hmm. But I don't know how you can be acting in someone's best interest if you're doing it for a large group. It's a tough thing to do.
Right. It has to be individual meetings to be able to have it. I think having a source with lots of choices is wise. The hard part is they want to charge a lot for it, and companies don't want to pay for a lot of investment choices. But if the companies do, then what you got to do is have an investment coach helping you, guide you through some of your choices and solutions and making wise decisions. So in a market like we have now, we have interest rates going up. Stock market has been going down. If you were investing in technology stocks, let's go back to right when COVID was hitting, and that when the market had a really rough time, dropped 38%. And then from that point, the market sort of took off on certain technology stocks, right, Alex?
Yep. So a lot of that stay-at-home technology, this new COVID economy, they called it.
Yeah.
They were extrapolating it forever because just like when things go bad, it's going to be this way forever, and that's not always true. So the tech stocks got ahead of themselves.
Okay. Yes, I'm old, and so I'm going to begin my conversation with I'm older. Not too old yet. I'm good. I'm right at the right age, I think.
You're very spry.
So imagine in the late 90s, they called it a tech bubble. Now, what would you call right after COVID till the end of 21? You have to call it almost like a back to work bubble, a COVID tech bubble, where those stocks, the air is out of them. Some of them have lost 80% of their money from the highs. And the thing is that if you rode those all the way down, we're going to talk about in the show is that what do you do now? The hardest part about investing is building a portfolio that isn't chasing to get rich quick, but for you to be wealthy to reach your goals. And so what happens in investments is you got to weigh out how you're investing your money and what your goals are. How do we reach your goals? Make sure this portfolio all ties in together.
And I really think the biggest thing when you're investing in risk assets like equity stocks, tech stocks, having the ability to not have to sell makes you a good investor because then you're able to take the emotion out of it. Absolutely.
The emotion of the stock investing causes us to do the opposite of what we should. When the things are going down, you want to sell because you think it's going to go down forever, and then you are selling when things are down. When things are cheaper, normally the answer should be buy, right?
I hope so.
I try to tell people that are working that, hey, the market's at a discount, and it's at a discount. Let's buy the stock funds with your ongoing money. One of the issues with the target date fund with someone that's contributing is that it might be 30, 50% bonds that you're buying every month instead of dollar cost averaging the stocks. Do you know on your 401k, 403b, TSP website, you actually can go in and you can have your contributions go to riskier and your core portfolio be lower risk. There's all kinds of options inside these websites, and we guide people with that. We actually do investment coaching like that.
Yeah, and it's important because the structure is completely different. You talk about dollar cost averaging on the way in. Great thing to do. It's not something you really want to do on the way out. You want to pick your exit.
That's a really good point. Say that again. Go real slow for me.
All right. Dollar cost averaging, buying the market multiple times.
Or like paying out your paycheck, money going in. Okay.
That's a good thing.
Right. Because you're constantly putting money in.
Yep.
Buying like the ups and downs of the market.
And you're not picking one entry point. You're slowly getting in over a period of time, taking advantage of volatility.
Not trying to guess, just buy.
Yeah. So it's not that way when you're taking money out.
Because you don't want to be just willy-nilly having your portfolio send you a monthly check where they sell everything in your portfolio.
Yeah, no matter what. Like that's
we've seen that before.
A lot
of these computer-driven portfolios will actually pay out that way every month. They'll sell every month.
And that structure for me is fundamentally wrong.
We believe in more of a concept of having money in cash. That's for 6 months to the next year. We flow dividends and income into it. We have other income being provided, guaranteed, and then if we need to sell, we sell on the highs, fill the coffers up. Things are low, we don't sell. Things are down when things are low.
Yeah, it's not what you want to do. Now, don't get me wrong. There are scenarios out there where people are going to have to sell something. Life happens; it gets weird, But besides those odd events,
right?
The stock market does this. It goes down sometimes. So we have to build our plan to be able to withstand these period of times.
The volatility in a market is a normal thing. The rotation of a economy slowing down would be normal. I do not believe coming out of a pandemic is a normal economic time. It's unusual. What I mean by that is think about COVID. There was money given out by the government to help us when we needed it most, and then it kept on coming. Most recently, they paid off a bunch of student loan debts. That's They have their own website right now. You can go and finally get that money to pay off your student debt by the end of this year. What you have to do when it comes to the student loan debt is just go to that forgiveness website through the federal government to get it started. The thing I'm trying to get at is that there's money, a lot of free money. That free money allowed people to go out and buy and spend and do things now that things are more freer, and that's added to the inflation. So is oil and gas prices added to the inflation, and then there's this fight with interest rates trying to slow down an economy that's just starting to get going after we are allowed outdoors again.
Yeah, it's like you look at the charts, it's like, why did the stock market go up so much when the world was shut down for 2 years?
And that was people at home trading and putting money in and having cash to invest and putting it in and investing in, and certain stocks rode up a lot. A lot of the conservative stocks did not go up.
Right. I mean, and that's what you want to do when you invest. You're not trying to reinvent the wheel here.
All right. So we have fundamental beliefs for our clients and ways of reaching their retirement goals. Those retirement goals are reachable for anyone and everyone that we meet with if they do fundamental financial planning. So what we're trying to say here is this. Our clients figure out the long-term goals in their life, and we put them on a plan to reach it no matter what happens, no matter what the market's doing. And so we do a combination, a diversified portfolio that's managed by us with your guidance of telling us what kind of risk you want to take. We do manage that money, and we build asset allocation, we hire private money managers, and design it for whatever situation that you are in.
Yeah, and all our clients are different. We don't have these boxes where you come in, you check, hi, my name's moderate. Hi, my name's moderate aggressive.
Yeah, I got two choices for you. Yeah, and so the idea is this, is that we need an investment coach, someone to help us, to talk us off the cliff, to get us to get motivated to buy that investment, because you all know what you should be doing, but you might not be doing it. That's why you got to have someone to call to help you do what you want to do. So in financial planning or investment management, we're trying to find out what do you want this money to do for you, and then let us do it for you to make sure it happens. That's the key. Because the idea is this, the best part of retirement is going to be getting your time back, where you decide how to use it. Before retirement, your time is tied up with other commitments, mainly your job. A lot of that goes away in retirement. Your time is now consumed by things that you want to do. It's so easy to begin winning in retirement. Go to our website at akersfinancialgroup.com, scroll to the schedule a meeting section, and let us know you'd like to schedule your free consultation with one of our team of advisors. That's akersfinancialgroup.com. Or you can call us at 833-WIN-RETIRE. That's 833-WIN-RETIRE. We'll give you a call on Monday to schedule your free in-person or Zoom meeting. Go to akersfinancialgroup.com or give us a call at 833-946-7384 to start planning for your retirement now. What does 25% down and 33% up have to do with your investments? We'll talk about that in 2 minutes in the second quarter.
You're listening to a pre-recorded show. Welcome back to Winning in Retirement. Call 833-WIN-RETIRE now to schedule a visit with Brian and his team and begin winning in retirement. Once again, here's Brian Akers.
Yeah, this is Brian Akers, and welcome back to Winning in Retirement. Here with me today is Alex Monk, certified financial planner, a financial advisor. You basically have an accounting degree. You have a career here at Akers Financial Group that just keeps getting better and better. You lead our investment committee. These are all just the kudos for you, Alex, for all the work that you do at Akers Financial and for your clients. But the idea is this, Alex. I got to drain all the information in your head out. I got to get all of this out to the clients. They need to hear what we're trying to do for our clients on the investment side. Are you ready, Mr. Alex Monk?
Let's do it. Let's get it all out of here.
All right. So just to play the mess with you, I have my comment. I'm going to read again, and I want you to try to explain that. What does 25% down and 33% up have to do with investments?
So those are math numbers, Brian.
They are numbers. Yes, Alex, that's brilliant.
So when you lose money or when your investments go down, I can hear this all the time. People are like, I lost so much money. I'm like, well, did you not know where it went? No, things went down, right? Because we always remember that top value, but we'll get back to that. When you lose, let's just do easier math. Your numbers are pretty hard, Brian. But let's say you go down 10%.
Okay.
And if you're down 10 and then you make 10, you're not back to whole.
You mean like you have $100, you lose 10%, you go down to $90.
Yep.
And 90 times 10% on the way back up is 99. So you're $1 short.
Right. So you got to make 11.
So you got to make 11% on the way up. And so, all right, so the math is fun to play around with, but so when you have big losses, they are harder to make up.
Right, because you need bigger wins.
Right, and so there's things to learn from that. What kind of things can we learn from just that simple example of when you lose 10%, you got 11 to come up, and then 25% down, you actually have to make 33% to get back to break even.
It's a lot of odd numbers in there.
Well, it's like falling in a hole. Now you got to dig out of the hole. And the stock market, if it goes down 25%, which it has this year, you got to get 33% on the market on the way back up just to get back to where you're at the ground level again.
So let's assume that you did lose this 25%, right? Well, one thing that's not going to get you that 33% is selling and going to cash.
Absolutely.
There's just no way.
Well, people have to make two perfect decisions. They got to sell, watch it go all the way down, and then they got to buy the bottom. And nobody does that. They end up waiting for it to look better, and it bounces back up 10, 20%. And then they're buying back way above where they were.
And I've had this conversation probably once a day since things got real volatile. I don't even know how many times, but it's like, if that's what you want to do, then you have to make that decision, because I don't like being wrong.
In market timing, we're going to be wrong.
You're going to be wrong.
The only thing we control is our entry point with money. And that's what we say dollar cost averaging, which is put money in over time. And so try not to guess the market. Now imagine that we have worked with clients for over 30 years, which I have. And the crazy thing is markets have gone down. Do you know in 1987, the market went down 27% in one day?
I heard that, but I was pretty busy that year.
That was a Monday morning, and it went down 27% in one day.
That's Black Monday.
And then the next day, the firm I was with, we pushed all the cash we had in and bought so that when it would go up, and it went up on Wednesday some, but it took a while to catch back up. So if you think about 27% down, that 25% down and got to get 33 to get back up, that you had to take time to get back all the way to the high. This is like 08, 09. 2000 to 2009, that's when the stock market went down with the whole problem with mortgage-backed securities. Yep. And you saw Merrill Lynch and Lehman Brothers that went bankrupt. Banks had a lot of problems because there wasn't a structure to really back the bonds that were there.
Well, and the bonds were holding different things than people thought, and it was dicey.
But the stock market itself, from its high to its low, there was at one point a 68% down on the S&P from the high of it in 2007.
Call that peak to trough.
Right. So when we think now, a decade later, people that were successful during that time, they are not the ones that got out and then stayed out, not the ones that got out and tried to guess back in. It's the ones that said, my portfolio is allocated right, the amount of risk I have is right, the investment is right, I can afford to have a loss on some of my money, and they stuck with it and rode it back up.
And those, I meet with some people that are still scarred about making the wrong decision in 08, 09. I lost so much money then. Well, what happened? Tell me what happened.
Right. And what did they say?
They sold. They got scared.
And what do they want to do now?
They're scared again.
Right. They want to get back out again because they believe the emotions of things going down, they believe it's going to always go down. And the idea is, have you noticed earning reports of companies and stocks here in the second half of 2022? They're pretty good.
Bad.
Yeah, and the reason it's pretty good is there's lots of money. They're buying certain things. That money is growth rate. It actual recession where we feel it might be coming. It's not.
It's a different type of recession too, because it's an inflation-based thing. So things are costing more, right? And companies are still making tons of money, but their margins might be compressed a little bit because their cost of goods is going up. So we technically have been in a recession for 9 months.
But the concept of a stock company that has pricing control and they control the need for their product, meaning that they sell a product that people need no matter what's going on in the economy, and they have price control, they can keep their profit pretty level or even increase in a down market.
Yeah, everyone's been to the supermarket, right? You're still eating. Mm-hmm. Food companies doing okay.
Well, like I look at bank stocks, they're way down, but bank stocks are making more money than ever because they might not have raised their savings and checking rate, and they're charging mortgage rates higher than ever. Not ever, but most recent memory.
And it's kind of embarrassing. I was on a very large bank's website the other day, with a client. This is where they bank. Oh, let's see what their CD rates are like.
Yeah.
And it was like 0.0 something. I'm like, this is crazy. They're making money hand over fist.
Absolutely. And so one of the biggest things in the last few months has been the ability to make some money on cash. And we've been using even short-term treasury bills as a way of making 4% or more, just as a low or no risk way of investing cash.
And not as a way of getting rid of your stocks. Let's go hide out here. We're not that guy on CNBC that's, go to cash. That's not the way it works. If you have the right allocation and you have money that's sitting there doing nothing, then invest that cash.
All right, so here in the second quarter, my main topic I want you to learn is that big losses are hard to make up. If you were in a tech fund that in February 21 was really high and you're excited because you doubled your money, if you rode that down since then, you've seen maybe more than a 50% decrease. That 50% decrease, for us to get all the way back up, takes a 100% increase to get back to where you were.
We call that a doubler.
Right, it's a doubler. Now, if you're buying it, it sounds a wonderful thing because you're buying low and it'll come back all the way up and you'll be where you want to be. But the hard part is to add money while it's down because you've already wrote it down. So a lot of people don't want to do that. I usually come around with the concept of, hey, if this was a garden, you would pull the weeds. Is that stock a weed? In other words, is that stock a company that doesn't make profit? The industry is failing. The industry can't keep up. Or is it a stock that's a great stock to hold? It's a quality stock, good dividend, great PE ratio, because this pulling back of the market brings the pricing in alignment with their earnings, and you might see PE ratios where they need to be. When price to earning ratios get too far ahead, the market's overpriced, and we're getting down where some of these stocks are great price, great values.
Yeah, fundamentals are coming back, and that's a good thing because we got detached from fundamentals during this COVID period, and this is healthy. This is a natural thing for the stock market. I know it's not fun. It can be, doom and gloom, but this too shall pass.
Right. And so the amount of time it takes to come back in certain aspects of the market will be time, not immediate. It's not going to be a V where you see, well, the market goes down and I'll be back up next week. Now, some stocks might be able to do that, but the overall market might take longer. If you think back to 2009, we saw 2013 before the S&P started to get back to where it was. The NASDAQ, way back when we had the 90s, the late 90s bubble, it took it a long time to get the NASDAQ back above the high of 5,000.
But now's also a good time to pull those weeds. Like you said, let's say it's a taxable account. You're not going to get crushed with capital gains, most likely. You might be able to generate some losses and then hold on to those for the future. I mean, I know a lot of people last year, the year before, they really got hurt when their mutual funds paid out giant capital gains.
Absolutely. So one concept, tax planning, is called tax harvesting, where you use it down to sell stocks that you don't want to hold. The other basic planning we've talked about in many of our shows is that when the market's down, it's a great time to take IRA stocks and convert them in kind to a Roth IRA.
Kind.
In kind means you're shifting the stock over to the Roth account, right, Alex?
Yep. So we're not going to sell it. You're just going to keep it.
It shifts over there. The day of the transfer is the taxable event on a Roth conversion. And then that stock's over on the Roth side. And then as the market comes back over time, that'll be all tax-free growth on the way back inside your retirement account, which we strongly encourage that.
Now, side note, don't pay the taxes out of that IRA, because that's not a good thing. The math there doesn't work for you.
When you hear our show, and we're talking quickly about topics, it's because we're hoping that you're a long-term listener. If you're not, you can go to our website, akersfinancialgroup.com, and on that website, there's a radio tab, and our other shows are all listed there. You can go back and hear a history of different shows, different topics. We've been trying to cover each and every topic that would apply to our clients as they build their wealth for retirement and how they can stay in retirement. The show being called Winning in Retirement means we got to make sure we're making wise decisions. And that's why we're talking about this show, is why you need an investment coach. Why? It's because coaches are very helpful. Sometimes you don't like them. I mean, you ever had that problem, Alex?
I have had so many coaches just beat the crap out of me. And it was for the...
In a nice way.
Yeah, well, maybe not at the time, but they wanted the best for me.
Right, and sometimes you don't see that because you're in the now, you're in that moment.
I'm emotional. There's all those things going on, just like with the market.
And so an investment coach would be like that. They'd say, no, don't do that. Don't start putting money to your stable value fund, your 401k. Buy the stocks. Or if they make the comment, I put in $6,000 and I lost all $6,000 this year in my 401k. I'm like, keep buying. Let's make sure all of your money is buying the market. These are all these things on why you need an investment coach. And that's what we're trying to cover here on this Winning in Retirement show. Because in retirement, we want your biggest worry to be all about where you're going to drink your morning cup of coffee. We want, basically in retirees, we want our retirees that work with us at Akers Financial Group to truly, truly just be able to call us to help guide them through. We want to be that investment coach that they need to help things be designed based on their goals, the income flow the way they need, make it all work, make it all come together for you. It's so easy to begin winning in retirement. All you got to do is meet for a free meeting with one of our team of advisors. That meeting can be in our office or in person. You just give us a call at 833-WIN-RETIRE. That's 833-WINRETIRE. We'll give you a call on Monday to schedule that in-person or Zoom meeting. So go ahead and give us a call at 833-946-7384 to start planning for your retirement now. Manage your money to meet your goals. We'll explain in the second half of Winning in Retirement.
You're listening to a pre-recorded show. Welcome back to Winning in Retirement. Call 833-WIN-RETIRE now to schedule a visit with Brian and his team and begin winning in retirement. Once again, here's Brian Akers.
Hello, I'm Brian Akers. Here with me today is Alex Monk. We are both certified financial planner practitioners from Akers Financial Group. What that means is we are financial advisors here to advise you on your retirement. Now, in the radio show, we talk broadly about things, and then we invite you to give us a call to have that personal, free consultation about where you are and what we can do to help you. And that's why we put together this show called Why You Need an Investment Coach. As financial advisors, we need to be there at the times that are like this, that are the more volatile times in life. And so you can make the wise decisions to meet all your goals throughout your life, even if the short term isn't looking as good as it should. So the show today is called Why You Need an Investment Coach, and here with me is Alex Monk. Welcome to the second half, Alex.
Let's do this, Brian. This is my favorite topic.
All right, so we have lots of topics, but let me talk about that coaching thing again. So it's after halftime. Halftime, when I'm coaching, I like to do the cookie approach. You ever heard of the cookie approach?
No.
I know, I eat a lot of cookies, but imagine a cookie is where you sandwich the tough love in the middle. So you start with something nice. Hey, great effort in the first half. And then you say, hey, the turnovers are terrible. Pass to the team wearing Air jersey. You know, that kind of comment. And then you finish up with, you guys are all over the floor. You're diving. I love the effort. The effort wins championships, things like that.
That's not a great cookie. That one kind of hurt.
Well, it's a tough cookie because everyone's visualizing those turnovers that they threw away because the other team dunked on or whatever happened. But
you want your coach to tell you that.
Well, you want to know what you got to work on. Imagine financial coaches need to tell you what to do and also what not to do. We can make some emotional decisions that are going to be very tough and wrong when we do it at the wrong time. This quarter, the question is this, Alex. Let me see if I can say it properly. All right, get my paper out there. Here we go. Manage your money to meet your goals. Sounds simple, but what does that really mean?
So for me, it's giving purpose to your money. Don't just put it all in one bucket. And I don't think anyone out there has all their money in just one account, right? There's just no way. You're going to have, hopefully not, but you're not going to have, because you're going to have 401k, you're going to have Roth, you're going to have IRA, you're going to have non-qualified, you're going to have money inherited, you're going to have all this different stuff, this collection of things.
Right.
So it all needs to talk to each other. Mm-hmm. Your coach, like the offensive coordinator of a football team, he sits up top so he can see what everyone's doing. That's what you need is you need someone that can give you that large top-down approach for what you do with your money. And I think that's where we excel. And we give purpose to that money based on what that person wants. Not what I want, what you want.
Yeah, and that's a neat approach when it comes down to it. When I was just thinking about financial planning 30-some years ago and what I wanted to do or be in my career, when I was thinking about investing and making all these decisions, I never could come up with a good answer without the whole story from the client. Well, what's going on in your life now? We call that your unique financial fingerprint, which is where you are now. Where's your investments? What's your portfolio look like? What's your balance sheet look like? Do you have debts? What kind of goals when do you need money? All these things, we write it all out so that we can come up with, all right, so if all these fundamental things are fixed and organized, we then can take risk, and then we balance the risk so that we can say to people, we don't need that stock money for your income next week. We have it planned out. We can absorb this downturn and be ready when it comes back up.
Yeah, and people are always like, well, why is the stock guy asking me when my kids are getting married, or what vacations, or how old's my car, or when's the last time I had a new roof? Like all these big ticket things, because they require money. So we need to be able to be at least 6, 12, 18 months ahead of those things.
Absolutely. And the best way to do that is to write it down. And an investment coach, so the show is called Why Do You Need an Investment Coach? So what we highly recommend is this. You need someone to help you manage it, not just someone to how do you put it nicely? Like if you're doing it all on your own, you know what you know. You might not know everything that's out there. You might not know everything that could be used for you. So we've found that even our most brilliant clients, we add value because we think outside the box, and we meet with multiple retirees and people getting ready to retire every day. It's our job, our full-time thing.
Yeah, I mean, the last couple of years created some stock market geniuses, right? Everyone and their brother was out there making a mint. I want to see where those people are at today.
Yeah.
Because those big wins, they usually come with big losses because you're taking some kind of risk.
Because you let it ride and you don't pull things out and bounce out and build your future with more conservative concepts. One of the things when you think about while you're driving, you're running around on a Saturday, you're thinking about your money. You think, okay, why do I need an investment coach? I don't have not a good reason. Well, one reason is this, is that what if the investment coach is going to make you perform better? Perform better, the way we judge that is by your net worth, by reaching your goals, by retiring and staying retired. And the thing about our clients, that's what we do for our clients, is we help them make these tough decisions. We guide them through retirement, and it works out because of the total balanced approach.
And it also gets you on the same page with your goals. And that could be you and your wife on the same page and whoever it is. But if you're the one making all the decisions, you're the one that has to deal with the outcome.
Yeah.
And you don't know what it's going to be. I mean, most people don't retire for a living. They work for a living. They're good at what they do, but not what we do.
Yeah, I've seen many of the people that run very large corporations, they'll come in and meet with us where they know that they want to delegate something that's very important to them, which is their retirement, to someone that's going to care for it as much as they do or try to, and also have their goals in mind, but they also want to delegate where someone's going to be able to act and react and help them get there without them having to put all their attention on it. And that's really the guidance we try to provide, is to come alongside, be that advisor, the investment coach, to help people make the decisions to maximize everything they can do to get them where they want to be.
And it's nice when, having review meetings right now and a client's like, well, what should we be doing? It's like, well, guess what? We've already done this, this, and this because it was the right thing to do.
Yeah.
Oh, well, that's great. Oh, I feel better.
Yeah, I had this couple in, they're probably mid-30s. They came in, they're like, about probably 3 months ago, we don't know what we're doing. We don't know if we got anything right. So after 3 months, we went through our list of, we're done. All the fundamental financial planning pieces, all in place. This is what do you want to do next? And they're like, and they went through the whole list. Like, oh, wow, we have done a lot these last 3 months getting our fundamental piece organized. And now that we can just concentrate on investing and growing and saving and doing other things in life.
Yeah, and time's our most valuable resource, right? So do you want to spend it watching the stocks all day, or do you want to spend your time with your family? Thinking about things that really matter.
Yeah, you want to have a balance of life. And some people totally enjoy watching stocks, which I understand. The hard part is that trading account can't be your only investment. If that's all your future sitting in that one account, that's a lot more risk than you probably need to take. So why do you need an investment coach? Managing your money to meet your goals is a big deal. You'll hear lots of people talking about products. A lot of people talking about this is the solution to solve this. Tax-free, zero, whatever the marketing name is, they're trying to fit a product in as the solution. And we believe you need to understand that managing a multitude of answers is the true answer when it comes to planning and implementing your proper investment.
Yeah, there's no magic bullet. A lot of that stuff is all, gimmicky. Is that what you really want? Do you want the...
Well, it's a sales thing. They'll sell it to you, and then they'll disappear. They won't be around again.
Yeah.
And these products are things that are sold to people that we come in as the advisor, and we say, oh, this is what you've done in the past. Well, this is how it works, and we try to help them understand it and understand where it fits, if it still fits at all, and try to make sure they take advantage of what they bought in their past.
It's funny because I see a lot of the commercials and all that stuff. I hear the ads, and we can sell anything. I mean, we can do we can do the same thing, but there is no way that thing's right for everybody.
And not for all the money.
Yeah, it's just...
Yeah, so when you're thinking about manage your money and you're trying to figure out who to go to and you're trying to make a decision between different firms, different people you hear or people you read about, what you got to understand is, first of all, do you relate to that advisor when it comes to them understanding what you need and want in life? Secondly is, what are they offering you? Is it a one-stop thing where they sell you one thing and then you disappear or they disappear on you? Or is it something that's going to be an ongoing relationship that becomes an investment coach so that years like this, you have someone you call or you meet with and you go over and make sure things are okay?
And it's one of the greatest feelings as an advisor, at least for me, is when a client they say, well, I trust you.
Yeah.
I know that you're going to do what's right. And that's a big win for me.
Yeah. I think it's a great thing to hear from a client. And then all of a sudden I think, oh man, I better work even harder. Because
it keeps you motivated.
But you want to keep earning that trust by doing the right thing. It doesn't make anyone a perfect person and perfect in financial decisions. It just makes informed decisions actually give us the better outcomes because it's not, here, I'll buy this. This one was the best performing fund last quarter. It's like we are actually looking at how it all fits together. We can see when people come in with certain portfolios from certain companies, we sort of know what they're going to sell you because that's what they do. And we come in and we look at it and go, oh, we just don't think that ties into you. Like people inherit money, and many times they receive the inherited account. The advisor of mom or grandpa had the money invested for them, and then all of a sudden the money's in your name. It's still invested for your grandparents.
And you're 100% in a bond fund.
And you're wondering, well, why hasn't it performed? Well, have they met with you? Have they talked about your situation, or did they just partition it out? People that inherit money need to design and build things for themselves too, and most likely change some of the investments to tie to their goals.
Typically, you're not going to have the same risk profile as your 90-year-old grandmother.
Absolutely. So at Akers Financial Group, yes, we would love to be your investment coach or financial advisor. The reason is that we are an independent, local financial advisory, financial planning firm, and money management. When it comes down to competing or working with other advisors, we don't have a big company on Wall Street to report to. We report to you and to you in meetings. We have offices in Lutherville and also in Forest Hill. We have clients all around the country, in many, many states, as our clients spread out and then refer us into different places. It's so easy for you to begin winning in retirement. All you got to do is give us a call for a free consultation with one of our team of advisors. Call us at 833-WIN-RETIRE. That's 833-WIN-RETIRE. We'll give you a call on Monday to schedule your free in-person or Zoom meeting. Go to AkersFinancialGroup.com or give us a call at 833-946-7384 to start planning for your retirement now. Think of your investment coach as an asset. We'll talk about this in the fourth quarter in just 2 minutes.
You're listening to a pre-recorded show. Welcome back to Winning in Retirement. Call 833-WIN-RETIRE now to schedule a visit with Brian and his team and begin winning in retirement. Once again, here's Brian Akers.
Welcome back to Winning in Retirement. I'm Brian Akers, president and founder of Akers Financial Group. And here with me today is Alex Monk, certified financial planner practitioner and financial advisor at Akers Financial Group. You ready to go here in fourth quarter ups?
It's almost afternoon, Brian.
So what do you think about fourth quarters?
That's how you close.
That's how you close. That's how you win.
I mean, you have to make the right decisions at the end of the game.
And what happens in life is this: if you divide life in quarters, whatever quarter you're in, you want to make the most of each and every quarter. And when we were thinking about this show today, we came up with the title of Why You Need an Investment Coach. And this truly applies to whatever quarter in life that you are. No matter what age you are, you need some guidance to make sure you're making the wise decisions based on your timeline, your goals, what you have available to you through your work and what you might not have available, and knowing what your options are. All right, so here in the fourth quarter, Alex, the topic, and just to get started on, is about think of your investment coach as an asset. Where would you go with that kind of talk?
Man, I could take that one anywhere. But
go ahead.
Not necessarily an asset or a resource. I think it's a resource. And I tell clients, look, there's no dumb question. The dumb question is the one that you don't ask and come to find out that it's a big deal.
Yeah, the silence part. I'd rather than be talking back and forth and working through things together. When there's silence, sometimes you got to try to ask. We ask a lot of questions to get up, like what do they really need or want, or what are they thinking about the stuff?
Yeah, and right now, some people are like, well, why am I paying you? The market's going down. Well, not as much as your account's not going down as much as the market. That's my job, right?
Yeah, right.
Not only to maximize the upside, but to limit the downside. And earlier in the show, we talked about the hardest thing to overcome is big losses, and that is so true.
It's wonderful to see. Okay, we didn't lose that much, and then the fun thing, see 6-9 months from now, you show a report and we're back to positive. And how did that happen so fast? And that was because we're patient.
Yeah, and like you said, we don't pick our investments by, what was the best fund last year? Let's go do that. No, we take a combination of history to see how things have reacted through time periods that relate. But then we also look forward. What type of environment are we going into? What do we think is going to happen? What are the key topics? And then you got to diversify it. You got to have all kinds of different stuff.
It's basically, this is one of the secrets, and that is we take less risks to reach the goal. We don't take more risk to reach the goal. We take less risk to reach the goal.
And, greed is a big thing when you talk about investments, fear, hope, and greed. But if you lose a ton of money, you're not going to be very happy.
Absolutely. It's not fun.
No, it's never fun. But sometimes you have to take risks. But you don't need to take all the risk if you don't need to. It just doesn't make any sense.
And as we get closer to our retirement years, we got to actually take less risk and balance more into the protected side and away from the risk side. The risk side, the way we define it, is anything that can lose you money. These are stocks. These are bond funds. These are variable annuities, things that are in market or sub-accounts tied to the market. You need to have some money that has the protections from banks, insurance companies, from the federal government, those kind of protections. One of the things when we're talking about managing and helping people as an investment coach, we want people to let us coach them through this, through whatever's going on in the market. They need to let us coach them. Now, have you been able to have people just sort of give you those reins to let you coach them?
You mean talk them off the ledge?
Well, that or they come in with one conversation. Oh, the market's going down. I want to sell. And then you say, that's not our plan. We want to do this. And then they say, oh, okay.
All the time. So, my big thing to do right now is once I get people to understand, look, this is what's actually going on in your scenario. When the market's down like this, I want to do Roth conversions. I might want to pull money out of our safe money and put it in the market.
Right.
So they come in, I want to get out of the market. I can't handle it. And we may end up adding to that exposure.
Yeah.
Because that's fundamentally the right thing to do. It's just about how you process it in your brain. And I tell clients, when there's blood in the streets, smile, we're going to make money.
Yeah. So those are guiding people for tough decisions. They're not the easiest decision for them to actually do it.
No, I mean, and a lot of times you can say, well, I understand logically what you're saying and it makes sense.
Yeah, not emotionally, but
my emotions are right there in the middle of it.
Well, and I tell them sometimes you got to understand there's noise. That noise is everything that's like on the TV shows with finance. They're running the numbers. They want you to stay watching. It's almost like watching a snow is going to arrive in 2 days. And the TV news all of a sudden have their weather reports, and you're watching a dry street. for 24 hours waiting for the first snow droplet to hit the ground.
You got red banners flashing. You got
warning. Oh, you might get 1 inch of snow, and then everyone sort of stops and watches. They take that same sensationalism into investments, into watching the market, into the ups are up and the downs are down. It's even like sports channels you watch. You would think there's only one quarterback in the NFL, and he wears green and gold because you don't see interviews from anybody else too much. Maybe one or two others that are over 45. But generally, the idea is they sensationalize everything, and you're not really seeing the whole broad market out there. You don't know that companies are actually making more earnings than ever. They're making profits, and those are real profits. The market's valuing it less at the moment, but there'll be a day when they turn around and value it more, especially those companies that are earning real money.
And there's some companies, it's this crazy concept out there now, Brian, but they will actually pay you to own their stock. It's called a dividend.
A dividend.
Yeah.
I'm sorry. I'm not going to act dumb. All right. So a dividend. So a dividend is when a company takes part of their profit, their cash flow, and they intentionally pay it out to shareholders.
Yeah. So if you're going through all this pain, emotion, at least some of these companies will pay to hold the stock.
And
Look at it that way.
That helps you earn money while things are flat and sideways, while we settle through a lot of things that have to happen here as interest rates are rising. The U.S. currency is very high. It could pull back. We have a lot of national debt. There's just a lot going on. It will take time for the markets to settle in, to have a base to come back on,
Yeah, and we had supply chain issues from, COVID, all types of different stuff going on. But the market will work through this. I mean, that's how the free market does it. And it's going to overtest on the high side. It's going to overtest on the low side. So we need to make sure that we're not making bad decisions on the low side.
All right, so he just mentioned bad decisions, and I was thinking about the show's called Why You Need an Investment Coach, and then I was thinking about out there's lots of companies and people that come across that they have the best solution for you. And one of the things you need to understand is where are they coming from? What are they doing? Do they have the ability to help you in any way possible? They're more independent. They have the ability to sell investments, manage money, a fixed annuity if you need it. They can help with a treasury bill. They can build portfolios, planning. Can they do all of that? Or do they only sell one product? One of the things is this, is if you look at their business card, if everything's written on the front side and there's no disclosures on it, that means they're not even registered for stocks and bonds and mutual funds. So their conversation will steer you away from that completely.
And they can't even talk legally. They're not supposed to talk about.
Yeah, but the idea when they talk about investment coach, they're going to say, "Oh yeah, I do that," and then they'll say, "Well, this is what we do," and they'll steer you to a product rather than a plan, rather than a solution, an ongoing solution. But you got to know what's happening there. If you get an invite to a dinner seminar, or to anything that's free, that's trying to have you listen to their talk, read their disclosures on the bottom. See what it says. And on the bottom, it should say how to check them out on broker check to see if they're a licensed stockbroker or an investment advisor at least.
Yeah, and you need to know what you're getting into, right? Are you getting sold a timeshare? Are you getting sold an annuity? Like, what's going on?
And that is so important when it comes down to managing your money, is having an advisor, an investment coach that's for you. Imagine that it's your financial life. You need a coach that comes alongside with you and you work towards your goals and it's working together. That is a very big point that you need to think about as you're driving around.
Yeah, and earlier you were talking about all these different licenses I have, and you have the same ones. It's so that we can help. Like, that's the whole point.
And that's the design of Akers Financial Group, is to be that independent voice, that independent company with this team of advisors that are well trained to take care of our clients, not just a one-time meeting or a few, but for their lifetime. That means that, yes, we're an investment coach, we're an insurance coach, we're the financial advisor. We're guiding them through each and every step, the good days and the bad days, the times when the clients are having new grandkids and the times when a spouse dies. There are tough times and great times with clients, but the nice part about being a financial advisor is that you're there hopefully when they need us most, that they'll give us that call and give us a chance to work and help them.
Yeah, and I even, there's other guys in this industry that I've talked to throughout these times are like, are you selling? Are you selling? I'm like, man, you're an advisor and you're having this type of emotional breakdown?
Yeah.
Give me your client list.
No, but so you listen to a radio show. It's called Winning in Retirement. This show today has been about why you need an investment coach. And as we've gone through today, we talked about big losses are hard to make up. We had an example. If you lost 25%, you got to make 33% just to get back to where you were. So that means you mathematically need to stick with what you're in as you try to recover. You don't want to be selling and locking in your loss, and then you also lock in the fact that you will not recover. Is the opposite of what you're doing.
Yeah, that's not the direction to head in.
And then we talked about things such as managing to meet your goals. Knowing what your goals are extremely important when it comes to understanding where to put your money, how to invest, when to invest, and to stay in stocks or not. And also the big one, knowing that your investment coach is an asset to your family. And how do you feel about all those topics, Alex?
I mean, I think I have the greatest job in the world.
And why is that? I mean, it sounds like you're just saying a little bit, but you really mean it, don't you?
I really do. Like for me, I wake up and this is just, I wouldn't know what else to do. Like I enjoy the markets. I enjoy talking to people. I enjoy knowing their situations and helping them have a better life. It makes me feel good.
Absolutely.
And everybody wins.
And the winning in retirement is truly helping them through getting ready, the journey of getting ready, and then implementing it through the retirement years, and then however else ends on being there to handle the worst of days.
Yeah. And, that's the bad part of it, but you get to share all the good things in life with them, not only their lives, but your lives. And it's a great process.
Absolutely. Well, thanks very much for a good show, Alex. Thank you, everyone, for listening to Why You Need an Investment Coach. When you are thinking about your retirement and you want to win in retirement, we want you to take advantage of the opportunity to begin planning with us at Akers Financial Group. Go ahead and schedule your free meeting with one of our team of advisors by going to our website at akersfinancialgroup.com. Scroll to the Schedule a Meeting section and let us know you'd like to schedule your free meeting. That's akersfinancialgroup.com, or give us a call at 833-WIN-RETIRE. That's 833-WIN-RETIRE. We'll give you a call back on Monday to schedule that free in-person or Zoom meeting with one of our team of advisors. Start planning for your retirement now. Go to akersfinancialgroup.com or give us a call at 833-946-7384. Thank you for listening. I'm Brian Akers from Akers Financial Group, and we want you to be winning in retirement.
You've been listening to Winning in Retirement with your host, Brian Akers of Akers Financial Group. Akers Financial Group offers securities through Arcadios Capital, an SIPC and FINRA member firm. Advisory services are provided through Arcadios Wealth. Akers Financial Group and Arcadios do not share any common ownership. Neither Arcadios nor Akers Financial Group provides tax or legal advice. Advice given on Winning in Retirement is general in nature, and one should seek further advice from their financial advisor, broker, attorney, and or tax accountant before investing. Be sure to read each prospectus carefully to understand all the risks associated with each investment. Examples and scenarios shared are meant to be for illustrative purposes only. Past performance is not indicative of future results.